All right, welcome to The Explainer. Today we're going to pull back the curtain and show you how financial markets actually work. Not from a textbook, but from the perspective of the institutions that drive them. This is the playbook we use, so get ready to see how the game is really played.
Our entire philosophy can really be boiled down to this one sentence. We do the exact opposite of the crowd. So while retail traders are panicking and selling, we see that as our green light. Their fear is literally our entry signal.
See, you have to understand that the market isn't one big, happy playing field. It's more like a battlefield with two very distinct sides, and our goals couldn't be more different. Let's break down who the players are.
Okay, so on one side, you've got us, the institutions. We see the market as a mechanism for business. We're looking at the big picture, the flow of money, the narrative. On the other side, you have speculative money. Let's call it retail. They're chasing patterns, they're reacting to indicators. Put it this way, we're playing chess and they're playing checkers.
So what's our main goal? What are we really after every single day? It's definitely not chasing price or following some trend. No, it's about hunting for the one thing that truly fuels the market, but one thing we absolutely need to conduct our business at scale.
And that one thing is liquidity. Think of it as the lifeblood of the market. All those buy stop and sell stop orders that retail traders place for protection, well, to us, they represent huge pools of fuel just sitting there, waiting for us to come and fill our large orders.
And here's the crazy part. These pools of liquidity, they're not hidden at all. They're sitting right out in the open, just above recent highs and right below recent lows. Price movement isn't random. It's an algorithm, and its primary function is to go where that liquidity is.
Let's be perfectly clear about this. We don't follow the market, we make the market. We are the architects. Our job is to engineer the path of price to go collect that liquidity, because that's how we execute our business efficiently. It's not magic, it's just business.
Now, this isn't just some random process. We run a very specific playbook, a three-step cycle, over and over again. It's how we build our positions, trap the competition, and then deliver price to our objectives. Let's get into it.
Our process is actually pretty simple, but it is brutally effective. First up is accumulation. This is when we're quietly buying up our positions while the market is calm. Then comes manipulation. We engineer a sharp, false move to trigger all those stop orders and, frankly, to create a bit of panic. And finally, distribution. We sell our positions for a massive profit into the frenzy that we just helped create.
You can actually see this entire playbook in a single candlestick. Seriously. Those wicks at the top and bottom, that's our footprint. That's the manipulation where we're hunting for liquidity. And the body of the candle, that's the real expansion move after we filled our orders.
A classic example of our manipulation phase is something we call the Judas swing. It's a beautiful, deceptive move. We'll push the price in one direction, against the real trend of the day, just to trap traders and grab liquidity, before we unleash the real, powerful move in the opposite direction.
Okay, now for the part you've probably been waiting for. How can you tell when our manipulation is over and the real institutional move is about to kick off? Well, we always leave behind a very specific signal, kind of like a footprint in the sand, that shows our real intentions.
So here's the theoretical blueprint. It's super simple. We drive price to a major liquidity pool. We grab those orders, and then we engineer a clear reversal. This is a highly calculated move, not some random market fluctuation. We always start with the big picture. We're looking at a higher time frame, like a 4-hour chart. We're not interested in all the noise. We're looking for our target, a key institutional level, maybe an old order block, where we know there's a history of large orders. That's where we plan to make our move. So once the price hits our high-level target, that's our cue to zoom in. We drop down to a lower time frame, something like the 15-minute chart. This is where the action happens. This is where we watch for that final confirmation, the signal that the real move is about to begin. And that signal we leave behind? We call it a market structure shift, or MSS for short. After we've taken the liquidity, we make our move, and we break a recent swing high or low in the opposite direction. It's our signature. It's our way of telling the market, okay, we're in control now.
So what looks like complete chaos to the untrained eye is actually, for us, a very structured and repeatable process. It's a checklist. Has liquidity been taken? Check. Has the market structure shifted? Check. It's a simple, logical model that allows us to navigate the market with incredible precision.
Look, understanding all of this isn't just about learning a new pattern on a chart. It's about a fundamental, total shift in how you see the market itself. It's like seeing the code behind the matrix for the first time.
It's really about adopting what we call the market efficiency paradigm. And that's just a fancy way of saying you stop seeing random squiggly lines on the chart and you start seeing the market for what it truly is, a highly efficient algorithm with one main purpose: to deliver price from one pool of liquidity to the next.
You know, the biggest thing to take away from all this is that you have to change your perspective. You've got to stop thinking like everyone else. Stop chasing breakouts. Stop relying on lagging indicators. Instead, start asking the questions that we ask. Where is the liquidity? And what's the most efficient way for price to get there?
So the next time you pull up a chart, what are you going to see? Just a bunch of random patterns? Or are you going to see the real story of liquidity and manipulation unfolding right in front of your eyes? Thanks for joining this explainer.